All right. Good morning, everybody. Welcome to today's edition of Trade of the Day Live. Really excited to have you here for this edition of the show. I see a lot of people popping in the room right here. So really excited to have you all here joining us. It's actually just going to be me today. Helene's going to be off for the day for today's TOD. A couple things came up, so she wasn't able to join us, unfortunately. But don't worry, I've got your back. I'm here for the show, and be carrying the whole session here. So have definitely some interesting charts here, interesting trade setup for you. I see a lot of our regulars popping in the room, so welcome in everybody. Really excited to have you all here. So thanks so much for taking some time to join us here. Good morning, Leo. Thanks so much. Appreciate that. But with that, let's go ahead and hop in because definitely some interesting things happen around the market here today. Let me go ahead and share my screen here. We can talk about some of the bigger stories here, some of the things that we've found pretty notable here today. And so, the first thing I want to start off with is, of course, the big headline and story of yesterday was the major earnings report from Nvidia. It was Nvidia Day. Nvidia Day has come and gone rather. I think largely the market had been baking in, that Nvidia was going to have a really strong report, was probably going to put out some really strong guidance. A lot of this was fairly transparent because, we had already heard from all of their major customers. We knew how much their customers were planning on spending. A lot of that money is going straight to Nvidia. So, it came in, I think, largely exactly as the market had anticipated. The stock had rallied and run up into the earnings print yesterday. Had a pretty solid stretch into that. Nvidia delivered a fantastic report. Also, too, issued really good guidance. So they had a great double beat. Issued guidance way above what everybody on the street was anticipating. But the real question was what the price action was going to be in the stock, and some of the other AI ecosystem stocks that trade with a high correlation to Nvidia. And so, of course, that was the bigger story. How was the market going to react to it? What was the price action going to be? Initially there was a pretty good pop in the shares, but as the evening went on last night, those gains kind of whittled down to roughly being flat, and then the stock actually turned negative overnight. And of course, you can see the stock's down. It's certainly off the lows for today. It was actually down a little bit more than 5% earlier today, but currently sitting down, just about 3.9% as we speak right now. Again, the stock rallied into that print last night, had pretty nice performance, was pushing up against that $200 per share level that's been pretty significant resistance for Nvidia for a number of months now. It really hasn't been able to hold on to gains over that. Again, we saw that happen last night too. It popped over it briefly and immediately gave those back, and of course now it's right back down into that range that it's been trading in for a number of months now. So obviously, a very important market story here. Obviously a pretty well, widely owned stock here, but certainly being, the insanely high market cap that this stock is, at $4.5 trillion, the most heavily weighted stock, in the S&P and the NASDAQ indexes. Very important stock to follow here because it, certainly has an outsized effect on the performance of the headline index. So just wanted to cover that here real quick. Make sure we talked about Nvidia here today. Again, there was nothing really wrong with their earnings. It was just, I think, somewhat a victim of its own expectations that it has set over the past couple of years. I mean, just continuing to deliver jaw-dropping results, but just at some point, you have to raise the bar even higher than that to get some of that outsized price action like we had gotten used to over the past couple of years. So just wanted to touch on that here real quick. Interesting price action here today, seeing it down about 4%, following just a fantastic quarter. But just wanted to touch on that. Certainly, Nvidia being down, between 4 and 5% here today certainly has been a bit of a weight on some of the other indexes. We had seen, of course, with the AI complex kind of rallying into the print yesterday, certainly Nvidia being about 7-8% of the S&P index. Given the heavy weighting, certainly the S&P had rallied into yesterday as well. It was notable yesterday's trading session because, what had short term become a bit of a ceiling of resistance here. We had seen a lot of resistance up around 7,000, but, over the past, call it, 2 weeks worth of trading days, that ceiling of resistance had actually dropped down to roughly about 6,900, where the 50-day moving average also was. And, we kept, trading up through it, struggling to break through that 50-day moving average. And then yesterday's session, we opened above it, stayed above it for the entire session, and closed up actually near 6,950, heading into that big catalyst with Nvidia earnings. And, you can see obviously in today's session, we've given that all back. You can see that we've dropped now. We opened right around 69.50, but throughout the day we've sold off. We've dropped right back down below the 50-day moving average, and so really wasn't that successful of a test, for the headline index of that resistance at 6,900. So continuing to see a lot of range bound trading here at the headline index. It's really struggling to kind of break out of this range, whether to the upside or to the downside. It's really staying very tightly compressed here in this range, which could certainly set up for a bigger move later, whether up or down. Generally, the longer an asset or an index consolidates and trades sideways, typically leads to a larger breakout on the other end in either direction. So certainly going to be watching very closely for any breakouts meaningfully above resistance or down below support. So still keeping a very close eye on those levels of 6,800 to the downside. Right now it seems like we are struggling with resistance on the S&P at 6,900. So that's a real key level that's developed here recently. And certainly, a lot of trading left to go. We have a lot of trading here just today. We have trading tomorrow just to see how the week wraps up. So going to be watching this very closely. But all that said, of course, still in a very, long-term, very strong long-term confirmed uptrend, still well above the 200-day moving average, which is our green line down here. So that's encouraging to see. And despite today's, somewhat negative price action on the headline index, one really encouraging thing is looking right here, we're still sticking with the S&P, but specifically, so this is the price chart of the S&P up here, but we're looking down here at actually this study. This is one, you've probably seen me pull up this study from time to time. This is an advanced decline line, but a lot of times people are looking at the advanced decline for, say, the NYSE, other different things. I like to really focus on this one because, if you tune into the show pretty often, how much we like to always look at the S&P to really get a feel for what the overall market is doing. And this is a really good reflection of not just the cap weighted index, but really the breadth of the entire index, and showing that, there's still a lot of bullish strength under the surface, because this advanced decline line, you can see it sloping up. It's hit new all-time highs here, excuse me, in the past couple days. So what that is signifying is, you see an advanced decline line sloping up. What that is measuring is the actual number of shares of the S&P 500 constituent stocks. So all the stocks that make up the S&P 500 index, all the shares that are exchanged on a daily basis, whether they're advancing or declining. So obviously you have more shares advancing, that line's going to be sloping up. More shares declining, that line's going to be sloping down. You can see we've been, on a very consistent and steady uptrend, coming out of the lows of April of last year. But even as the headline index, is kind of stalled, the momentum has really kind of fizzled out and is stuck consolidating here, we're still continuing to see this advanced decline line slope up. So that's, that's an encouraging thing. If we start to see some degradation there and seeing that breakdown, that would be a bit concerning. But just wanted to point that out, because that's a really nice positive. It's, definitely a bright spot, in today's kind of mixed price action for the market. So I wanted to put that there, still really encouraging what we're seeing under the surface here, showing some of the other opportunities that are going on out there. So, despite the weakness in tech and, information tech, comm services, things like that, there's other sectors that are really starting to, continue to perform. They maybe are not driving performance at the headline index, but certainly things like the equal weighted S&P continuing to look very constructive. So all that said, I do have my trade idea for today. So I'm going to go ahead and move on into that. And so we'll cover that here. And did just want to go ahead and throw this out there too. We're only live on Zoom today. We don't have the TikTok crowd we're looping in today. It's kind of hard to do that when it's just one of us hosting. So just live here with you all, tuning in the Zoom room. I know we have a pretty good sized room, so I appreciate all of you tuning in. I see Leo's already put a couple of ideas in the chat there, but I was going to go ahead and ask all of you, because right after I share my trade, it's the really fun part of the show where I get to interact with all of you. And you all are going to you have the opportunity to put some ideas in the chat. What I'm going to ask of you is to go ahead and put a ticker in there. Put as many as you want. Just put a stock ticker, ETF ticker, put it in there. I'm going to go ahead and analyze those, kind of give you my thoughts, how I would look to, understand that current chart, looking at it through the lens of my own technical analysis. So go ahead, if there's a stock ticker, a chart, something like that you want me to analyze, go ahead and throw the ticker or the stock name in the chat. And as soon as I go through my trade setup for today that I'm eyeing, I'll go ahead and start diving into those. So Leo, thank you so much for putting a couple in there. Holland, I see some coming in there too. So yeah, keep those coming, guys. Really appreciate that. And we'll hop into those here in just a moment. Excuse me. But for my trade setup today, It was actually for, excuse me, still dealing with that little bit of allergies and cold here. My apologies. But anyways, like I was saying, here is my trade setup for today that I was eyeing. It's one, I've pointed out weakness in this stock a number of times here over the past couple months. This is Strategy. It used to be known as MicroStrategy. The ticker is MSTR. Obviously, a pretty well-known company here. It's really tied to the crypto space, even though that this is a stock. This is kind of one of the original Bitcoin treasury, crypto treasury companies. This company is really just a proxy for Bitcoin because they have bought so much over the years. They hold an immense amount of Bitcoin on the company's balance sheet. So it's really kind of a leveraged play on Bitcoin, both to the upside and to the downside. So as we know, obviously crypto has been pretty challenged here lately. It's been, in a pretty significant bear market, well off of its highs. Obviously, this is a leverage play on crypto, has substantially underperformed even the underlying asset in question here, crypto. So you can clearly see that on the chart here. Very substantial bearish decline here, starting to trade down lower lows and lower highs. That much is very clear by the price action here. We do have our profit surge, just trend lines here on the chart. So you can see our 21-day, it dropped below our 63-day looking back to August of last year. That initiated the sell signal. You can see ever since then, very weak price action, just really struggling to catch a bid here on the stock, making, call it, what was that, right about midway through November, the stock started making new 52-week lows and has continued that trend ever since. So a lot of weakness here, really just looks like a falling knife type of chart here. Certainly would not be looking to purchase this one for a stock purchase or anything like that, because really has not shown any signs of putting in a bottom quite yet. It's still continuing to trend lower. It's remaining below those trend lines, lower lows, lower highs. So it still looks pretty bearish here. And so I would actually look to trade this one to the downside. And again, this was actually a signal, our profit surge dashboard, for any of you that actually had tuned in to our recent presentations about that. It actually signaled a bearish entry signal for this one actually yesterday, still valid today, still looked really good. So, that's one thing that helped me spot this trend here. Really good entry point yesterday, as it had gotten to a little bit more favorable entry point for a bearish trade. So it's going to go ahead and act on that one. And in fact, real quick too, before I share the trade details, I'm going to go ahead and pop a link in the chat. It's just if you were not able to check out our profit surge dashboard presentation and demo over the past couple of days, we went live on Monday and Wednesday. I actually went ahead and talked about that. It was a great presentation. John and I got to sit down. Helene was also there too. And I could talk about my profit surge dashboard tool. If you didn't catch that replay, that link in the chat I just dropped to you there, you can catch the replay there. So just wanted to share that with everybody in case you did not get a chance to see that. But anyways, getting back to the trade, again, this was spotted by the profit surge dashboard for me just yesterday. The signal is still valid. And so, of course, looking to trade this one to the downside, very bearish setup here. So looking to, find a corresponding bearish trade setup to pair with this. So specifically looking at an option trade here, looking at the March 27th option expiration date, actually looking to sell a call credit spread. So this, even though we're using calls here, this is a bearish trade because we're selling this call credit spread. So looking specifically to buy to open the 165 strike call and sell to open the 155 strike call. You can see it's currently coming in about 152 at the midpoint there. So I'm going to go ahead and, just see if I can get it filled, around 150 or so, then I'll be happy. So I'll put my order in, right at 150. Hopefully I can get it filled, get the limit order filled, right around there, maybe even a couple cent higher. But with that, be able to collect that $150 credit if it gets filled. And, certainly as long as MicroStrategy remains below 155. So if you look on the chart right here, 155 is right here. That's my spread. I've sold the 155, bought the 165. So, that's a roughly about 20%, 19-20% to the upside. So a pretty significant buffer there to the upside with collecting that credit there. So that is actually my trade for today, is doing the bearish call credit spread, selling that credit spread on MicroStrategy. So that's actually my trade for today. I see we have a lot of different tickers coming in, so thank you all so much for that. Definitely keep them coming, and I'm going to go ahead and hop into these here. That's the next part of the show here, so really excited for this. But please remember, with this part of the show, of course, this is for educational purposes only, not to be interpreted as official investment advice. Also, too, some of the tickers that we discussed in this portion of the show, there's certainly a possibility that myself or members of market trading could possibly own shares or equity in some of the securities discussed on this part of the show. So with that said, let's go ahead and hop right in. And the first one up is actually Halliburton, and this is one, Leo, that we've talked about here recently. This is one I actually took a position on several weeks ago during one of the shows, and this trade's worked out really well. I actually went ahead and closed this trade out several days ago personally, the one that I had taken. So I still really like the trade though. It was just one that I was trying to, it was a shorter term play for me. I wasn't trying to play this one for the longer term. But looking at the chart here, obviously I still think this looks very constructive, making a nice series of higher highs and higher lows. It looks like it's within a couple pennies of setting a new 52-week closing high. Not quite to an intraday 52-week high, but certainly a 52-week closing high is certainly within its reach based on the range of today. So, certainly looks like a very encouraging setup still for Halliburton to me. Several of the charts here continue to look really constructive. In fact, getting back to my profit surge dashboard, this one actually was spotted yet again this morning. There's been several setups for Halliburton here in the past couple of days, so it's continuing to really like the setup here. And so I certainly agree with my system. I like the chart here. There's a lot to like. Trend lines look good. It's not overbought at these current prices, so really solid looking setup there. And then you're also asking me to revisit Monster. This is another one that's been on a monster trend lately. This is one I had mentioned, I know, several weeks back too. I'd actually purchased a call option on this one also. I exited that several weeks ago, again, because it was a shorter term trade. Wasn't looking to hold that one super for the long term. Obviously, again, this has been a huge beneficiary of some of the market rotation going on. Being in the staples, you're starting to see staples just kind of go parabolic, which does not happen very often. And but just looking at the chart here, certainly has remained very constructive. Breaking out the new series of all-time highs. The trend lines look very, very strong here for Monster Beverage. I will say, in the short term here, it's been trading above the upper Keltner channel for 3 consecutive trading sessions. The RSI down below looks a little overheated. It's been bouncing right around 80 for, again, several trading sessions in a row. And so, just, based on my knowledge, and you can just look at, looking back at different examples from the past over the past trading year here for, a Monster, anytime you start getting above that level of 70, you're starting to get a little frothy there. With the price action, it's probably run a little too far too quickly. And you're probably due for a little bit of a pullback in the short term. So, that's probably what Monsters do for maybe a pullback to the middle Keltner channel here. I wouldn't say that it's gotten, it's not that the uptrend has gotten unorderly and just taken off and, gone vertical. It certainly hasn't hit escape velocity or anything like that, but it's just a very orderly uptrend. It's gotten, mildly overbought here in the short term. I still like the trend. I would probably just be personally, if I was looking to enter a new position here for Monster, I would probably personally be waiting for a bit more favorable entry point. Give it a chance to pull back, cool off just a bit. And that's what I would be looking for in that one there. So Leo, thanks so much for the great tickers. Both of those are ones I'm continuing to watch very closely here and really, really like. Up next, Holland also gave me a twofer, so thanks so much for that, Holland. Really appreciate it. And up next is actually CLX here. This is Clorox. Wow. Okay, yes, so this is very indicative of what I was talking about with staples and their recent outperformance. So you can see, very clearly here, Clorox put in a bottom. You're looking at this chart dating back to late November, and very quickly accelerated off of those lows and started to trade higher, broke through some resistance levels, and very shortly thereafter, a couple weeks into January, we had our trend lines trigger a buy signal here for Clorox, and certainly it's been very constructive here as the market's really taken much more of a defensive tilt here in 26. So I think that this is a very clear trend reversal going on. Given that Clorox being a staple stock, given that it has risen so quickly like this, it spent much of this month trading above that upper Keltner channel, I would be a little hesitant to go ahead, and jump, full on into a brand new position right here, right now. I know it is below the upper Keltner channel, but, again, you can just see for the RSI here, it got up above 90. That's not something you see a stock do, particularly staple stock, do very often. And so for much of this month, it has been short-term overheated. So I personally probably be waiting for a bit of a pullback, say maybe down to the middle channel here. Maybe let that RSI get down to, 50, 55, something like that, and then start to see that trend start to resume higher. I'll probably have a little bit more confidence, in the chart at that point, and regarding putting on new position. But overall, very clear trend reversal here. It's a very powerful trend that seems to be forming. I would personally just be waiting for what I anticipate will be a better entry point probably here in the near future. So appreciate that ticker there, Holland. And the other one you put in there was Caterpillar. This is one that we've been a big fan of here lately. Obviously today it's giving back. It looks like about 3% here in today's trading off the lows. I think this is largely connected to the Nvidia report last night. This has been a bit of a data center story with this stock here. You can see, obviously it's had, fantastic price action here lately. Just ripped higher this month to some new all-time highs. Kind of consolidated around that 760 level, and then certainly, cooling off. Understandably, today it hasn't touched the middle Keltner channel in over a month, so it's due for a bit of a cooling. So I like to see that the stock, is remaining orderly here. It's not going too parabolic. It's pulling back to the middle Keltner channel. You're seeing the buying pressure lift the shares higher, seeing some profit taking occur, letting it cool off, and I fully anticipate that this one probably will kind of buoy itself right around the middle Keltner channel here. And once you start to see this one reaccelerate higher, again, this is a trend I really, really like. The trend lines are lined up. They're aligned very bullishly. Great series of higher highs and higher lows. So a lot of constructive things to like about the trend for CAT here. Once I started to see this one, maybe it's tomorrow's session, maybe it's Monday, maybe it's Tuesday, whenever it is, we start to see this one, start to push to, toward the near the highs of the day, start to show some resumption of that uptrend higher. This is a trend that I would still be riding with, just waiting to see that price action actually start to show signs that it's reaccelerating. I still really like this trend here for Caterpillar. I personally am following this one very closely here. And I see Gregorio. I don't know if you've tuned in before. I apologize if he has. I don't think we've had a chance to chat before, but good afternoon. Welcome in. I'm not sure where you're tuning in from, but thanks so much for being here. Really appreciate it. Thanks for saying hey. And I see Michael, you put MP in here. So this is MP Materials, obviously big rare earth play here. And so, this one obviously was a big trader stock last year. It was very, very popular. It was in the news a lot. Still remains in the news quite a bit. Certainly, had a huge pop last year after several, deals they announced with the federal government regarding some rare earth deals. Ever since then, though, it's been kind of stuck in the mud. It's had the big run up in October of last year, gave back a lot of those gains following that. Really hard to decipher. Much of a trend here because over the past 4 or 5 months it really has been pretty range bound. As you can see, there's clearly some support on the chart right here coming in around 52 and a half, $51 a share on the lower end there, and then some resistance up here where the stock failed right around about 72 and a half. So it's been kind of bouncing around in that range for the past couple months. There's really not a breakout one way or the other. It does look like, I don't know if this stock is reporting today after hours, but they had a report today. I don't know if it was this morning or after hours, but if I had to guess, given the price action's been pretty muted here today, my guess is they're probably reporting today after the market closes. So, one note about that is, I typically try to be mindful of earnings reports, because as we know, we just went through a whole earnings season by and large, and, we know how crazy and, outrageous, stock prices can react, during earnings season. I mean, just look at some of, how we started off today's show talking about Nvidia. They just reported probably the best quarter in the entire company's history, maybe one of the best quarters we've ever seen from any company ever. I mean, some of the numbers they put up were just eye-popping, and the stock is down almost 5% today at one point. So, even with their guidance being really good. So, it's impossible sometimes to say exactly how a stock is going to react, in the aftermath of a report. So when I see that, certainly from taking a trend type trade, I personally try and shy away from that because that's a little more speculation than I like to try and play. It's impossible to say exactly what the price action is going to be in the day or two following a big earnings report. But just sticking with the trend right here, like I said, it's really hard to decipher what the trend is. Very noisy. It's been kind of choppy for several months. So I probably personally would be looking to just look for other opportunities regarding trend following trades. There's certainly ways you could play a consolidating chart like this, but that's not our typical way. That we like to try and find opportunities out there in the market. So, if you were thinking about it like a buy, sell, hold, I would just be kind of, neutral, kind of hold on a chart like this. But thank you so much for putting the ticker in there. Let's see. I see Leo saying worked out well for you too. So it sounds like you still like the trends on both of those for Monster and also too for Halliburton. So glad to hear that the trade worked out great for you there. I always love to hear about our followers having some successful trades. So that's fantastic. I love it. I see John, you put in for Micron. So this is really interesting. Obviously, they are kind of connected at the hip to the whole AI trade. This is a different, it's still in the semi space, but a different area of the semi trade, being in the memory space here. Obviously, this whole basket of memory stocks has had some very rapid price appreciation here recently. Looking at this one compared to some of the other memory players in the chip space, I still like the chart for Micron here. I know it's down about 4% here today. I think that's largely just a move in sympathy because of the Nvidia earnings. I think just you're seeing a lot of selling just across the semi space just because Nvidia is down. You just typically see a pretty high correlation between all of these stocks. On days like this. So, I still like the trend here. I think it's really constructive. Given it's, on a down day, only traded down to the middle Keltner channel, it's still continuing to make a shorter term series of higher highs and higher lows, coming off this pullback from earlier this month. So I still like the trend here for Micron. John, it looks like you said you were trying to play this with a vertical spread. Looks like it was, excuse me, a mildly in the money vertical spread there. So yeah, that sounds like an awesome trade setup. So yeah, I would have to go and personally look at the options available and see how I personally might look to play it. But definitely with the stock like this, that I know recently we sent out a trade alert to some of our premium trade alert service members that was an in the money call option debit spread alert for Micron. So you're certainly kind of thinking the same vein that our team is there. So love to see that. Given that it's a higher price stock, obviously just trying to play it by, purchasing just a directional call, that, could get pretty expensive. Certainly, might be off the table for some people, given you start looking at in the money call, even at the money call. I mean, they're going to be very, very expensive. A chart like this, Micron, how it's currently trading, it's going to be carrying a lot of time value. So you'd be buying a lot of premium on a trade like that. But with all that added time value, that's what makes it such a great candidate for in the money call option debit spread. Again, that would be our personal preferred way to trade a chart like this. We've mentioned that I think in recent calls. So interesting setup there, John. I really like the idea, and it's like I said, it's right in line with how we've actually been looking to play that one here too. Let's see. And so I see, Michael, you put another one in there. You said PJ or maybe let's see. Oh, PM. Okay, Philip Morris, PM. Okay, perfect. Yeah. So this is obviously another one of the staple stocks right here. This entire sector. Let me just pull up the chart of the XLP ETF. I mean, it just shows you this is the entire sector basket for the consumer staples. So many charts, in the staples, they've just taken off year to date. You can see what this has done since the beginning of January right here. So going back to Philip Morris, obviously, a specific area in the staples, big tobacco company here. The real whole trade here is, with the market, all the anxiety going on, about AI, what it could disrupt, what could get disintermediated by AI. It's really the driving factor that's led some of the blowups we've seen in the tech space over the past couple months, but also two, some stocks and charts like this just ripping higher because the market's fleeing to some of these more defensive pockets of the market because as amazing as some of the advances are in AI, what some of the chatbots can do, you can't plug into a chatbot and say, you need a pack of cigarettes. Not getting into the whole tobacco discussion here, but it's just simply how the market's reacting. A chatbot can't produce a cigarette for you. You can't grow tobacco. It's something that AI really could only help to make efficient some of these more businesses like this, make them more efficient. It really is not going to disrupt them per se. So that's why you've seen these charts take off. Certainly, very constructive looking chart here for Philip Morris. It's gained a lot of ground in 2 months. I mean, coming into the year, the stock was trading, call it right around 160. It's all the way up to 190 now, so pretty significant run there. Just a couple months. It has broken out the new 52-week high. So a lot of things that we really like to see right here. Certainly it actually set a new 52-week closing high just yesterday. So a really constructive looking chart here. It looks like, bit mixed price action today, but still, I would say very constructive and bullish chart here. One note is, that it does look like it's a little overheated here in the short term. Just taking a look at our short-term RSI down here, it did get up to about probably 78 yesterday, and it's still above 70 right now. So, I see a stock, again, kind of talking about like Clorox earlier, when I see a staple stock in particular showing a short-term, overheated rating, given its run really far, really quickly, I probably would be a little hesitant regarding, say, a new entry. If I was still holding an existing position, obviously would still feel very comfortable with the trend here. But regarding a new position, I'd be looking for a pullback, something like this right here. You can see it, again, ripped up to new all-time highs. They're not new all-time highs, but new 52-week highs right here. Traded back down to roughly the middle Keltner channel, and you had this reversal day right here, seeing where the stock was starting to reaccelerate higher. I'd be looking for something like that on the chart before I'd probably be looking to go ahead and dive right into a brand new position. So again, I like the chart, I like the trend. Probably just be waiting for a bit of a cooling period here. Given the run that staples have had, I think they're maybe one of the top performing sectors again here today. Still showing some really strong performance. Let's take a look here. Dell, thanks for the comment, Dell. Welcome in. Glad to have you. You put in GM here, so General Motors. So this one is interesting. So, this stock, obviously it had a really strong run through the end of last year. Looked like it was trying to continue that throughout January, despite some pretty choppy, noisy trading. But, after, popping to some new highs there in late January, it didn't confirm those. We tried to hold those levels, gave them back pretty much, in the following 2 weeks worth of trading after. And then it's just been stuck in this range bound trading, really now, if you look back all the way through December, when the stock was breaking to these new 52-week highs here, we really have struggled to really close meaningfully above those. And it's just been kind of stuck in this range. And, that it's understandable for a stock, like GM. Again, it had a great run last year. Looks like we've definitely lost kind of some of that upside momentum here. And so it's just kind of stuck in this consolidation range right now. So, typically it's kind of harder to find, a spread type of trade where, it's a time value theta decay play on something like this, because typically these options for, stock like GM are not going to be carrying a ton of time value. So, it'd be hard to, try and find a trade to, say sell an in-the-money call option debit spread or something like that, to just benefit from the consolidative nature like that. So, it doesn't look like there's a lot of momentum behind this one right now. I probably personally would be looking for some other opportunities out there in the market. Seeing a chart like this, it looks kind of like the wind, somewhat has come out of the sails with this. It's kind of just stuck in that sideways range. But interesting chart there. I hadn't seen the chart for GM for a while. Certainly another note with that one is, with some of the recent tariff uncertainty, with some, the getting overruled and going back on and immediately going right back up again. Some of that confusion and uncertainty probably, won't be the best news, for a company like GM. Certainly, a company that would be taking a lot of, brunt of tariffs and having to deal with that, be a pretty big headwind. So some of that uncertainty might be weighing on the stock too, but just a couple thoughts with that one. Seeing here for Palantir from Bruce, he actually gave me 3. So this is a very interesting chart here. So this is one that if you tuned into recent sessions, Bruce, you probably saw where I actually have been trading this one to the downside. This obviously was one of the market's favorite stocks last year. I believe it was one of the top 2 or 3 performing stocks in the entire S&P 500 last year, at least for much of the year. Maybe not, throughout the end of the year. I know there was some kind of choppiness there, but for much of last year, it was one of the top performing stocks in the entire index. Was up, several 100%. Really great performance. Obviously, the stock's been taking a pretty significant breather this year. It's here in the past couple months, certainly a trend reversal has developed. You can see that with our trend lines right here. It's been breaking down to about 6-month lows here just in the past couple of weeks, making that really strong series of lower lows and lower highs. This is one that does carry typically a lot of premium, so it's a great candidate, I think, for say a put option debit spread, or selling a call credit spread against it. In fact, that's actually how I've traded this one here recently. I got a signal again from our profit surge dashboard using our bearish signals actually to trade this one to the downside. And that's what I did here just recently. I sold a credit spread on it. It did pretty well. I think I actually closed that one out for about a 35% or so win. I have to go back and look, but it was around a 30% win on that one that I closed out here just a couple days ago. So, still looks like an interesting opportunity here. It's really been struggling to, meaningfully pop back up above that middle Keltner channel there. So, I know it's been trading sideways for, a couple weeks roughly here. It's been kind of range bound. So maybe it's trying to put in a bottom. But, if we see further breakdown, below that 125 level, we could be seeing certainly a resumption of that falling to the downside. It certainly doesn't look like it's starting to reverse trend to the upside quite yet. So, and until proven otherwise, I think this one's definitely still looking for a pretty solid bearish decline. Up next, you gave me a couple other tickers too, is AAL. So let's go ahead and look at American Airlines here. Well, this one, the airline stocks, interesting basket here. A pretty good price action today. Trying to see, doesn't look like it was earnings, so I'd have to do some digging to see what the price action was today. But just looking at the trend, obviously, coming off of the highs to begin this year, it's down, pretty good year to date. Coming into the year, it was trading about 1525. Now it's all the way down to 1630, or sorry, 1368. So, definitely making a series of lower lows and lower highs. Pretty fresh actual sell signal right here, because, we had a initial pretty steep decline. We tried to recover. Now we've given those, those gains back from the recovery, making a new series of lower lows and lower highs there. So it looks like this one's still pretty bearish here. You could pretty easily draw a trend line right here, from this high down to that lower high down to here. And, it looks like intraday this one has failed again. So, it looks like we're continuing that series, a bit of a decline here. Definitely looks like a potential one to trade to the downside. I know that's how a lot of people like to trade these airline stocks, is more so trading vehicles than compared to long-term investments. I know I hear a lot of people say that that's actually how they like to utilize these. But yeah, it looks like, certainly a bearish tradable opportunity here. That's probably how I personally would be looking to position around this move for AAL. And then your last one you put on there was for OSCR, Oscar Health. And kind of a similar setup here. Obviously, a very different stock, but definitely a bearish decline here. Series of lower lows and lower highs. It tried to recover several times here in the past couple months. Wasn't able to clear that 18 and a half level, failed there several times. And actually just here, twice this month, it's actually broken down below support, it's not quite a new 52-week low, but it's about an 8-month low. So it's right on the doorstep of making new 52-week lows. From a long perspective, I never like to try and catch a falling knife. I don't like to do, any fishing on the 52-week lows list, trying to find long-term, stock purchase opportunities. But, from a shorter term trend, swing trader perspective, definitely looks like an interesting opportunity to try and trade that one to the downside here. So if anything, that's probably how I'd be looking to trade that one. Definitely pretty volatile. It's definitely been moving. So interesting setup there. And looks like Leo, looks like you were very enthusiastic about my analysis on Micron there. So that's awesome. I love it. Michael, let's see. Michael, you're saying that MP is reporting today after the market. So okay, yeah, MP is reporting after the market closed. Appreciate you clarifying that, Michael. Yeah, I figured, given that the stock was, roughly flat on the day, I figured they probably hadn't already reported it, probably having that coming up later. So thank you for clarifying that. Let's see. And yep, you agree, Leo, about some of the price action being parabolic. And let's see. And so, yep, yeah, it looks like a lot of agreement here. It looks like you're thinking on the same page as me, Leo. So I appreciate that. I don't see any I don't see any other tickers or any other ideas coming in. So go ahead. I'll give you just a couple more seconds, everybody. If you have any other ideas, to go ahead and post those in there. If not, we can go ahead and actually just wrap up today's session, because I've already covered my market analysis, kind of things that are moving the market today. Of course, my trade and all the other different ideas you throw in the chat. And Leo, I see that, just comment with you. I appreciate that, Leo, and I love getting the feedback. So thanks so much. Appreciate you putting those in there. Keep them coming. But I don't see any other things coming in. I see, Leo, I see that you said heck no on AAL and OSCR. So yeah, I totally agree with you from a stock purchase perspective. Definitely those are kind of look like falling knife, danger zone charts there with some of the trend reversals we have going on. So totally agree with you from that perspective. Definitely be looking to trade those to the downside. Holland, I see you mentioned HAL again. I did cover that one earlier. You're saying that one looks pretty tempting. So yeah, I agree, Holland. This one I mentioned earlier. I really like the chart here for HAL. It looks like a really great setup here. Continuing a really strong bullish trend to the upside. Again, actually looks like if it were to close right here, this actually would be a new 52-week closing high. So again, really constructive stuff here from really all the oil field services companies. This one, Schlumberger, Weatherford, all these charts look very much the same. They've been trending quite nicely here over the past couple months, and looks like it's set to continue that. So looks like we have one final trade here. This will be the last one. John just put in for Google. And Leo, thanks so much. Appreciate you being here. Take care as well. And so looks like you are mentioning a vertical spread here for Google. And so this is one I think, let's see. Yeah, Holland, totally agree. Yeah, can't live by solar alone. Exactly. Yeah, just with some of the power needs today, not making a value judgment on it, but just realistically, yeah, you have to kind of, at this point, you're seeing a lot of companies just like Google. They're looking for all the AI data center build out consumes so much power. They're looking for every any and every resource that's generating that in order to produce it. But John, getting back to your chart here, I think this was referring to a trade that Helene had put on maybe several weeks back. This is one that certainly looks like we're starting to see a bit of a trend reversal here for Google. So that it must have been a 305, 315 maybe that she mentioned there. Given that this trade has now taken out that sell strike and is actually now all the way down to the buy strike. If excuse me, I can't remember the specifics on that trade. I don't think it was one that I had taken. But as soon as we do have risk management measures that we do follow when it comes to our options trade, specifically our option purchases and option debit spread. So when we put a call option debit spread on, certainly we want to give that trade every chance and opportunity to end up becoming a winning trade. If the trend does, play out how our thesis thinks that it will. But if we do have an on paper loss of say 30 to 35% on that options trade, at that point in time, we're going to go ahead and look to just go ahead and close that trade out. Take that risk off the table and go ahead and just look for other opportunities, just to cut our losses on the trade, because, just obviously not every trade is going to work out exactly as we think it's going to, as much as we wish every single trade would. We just know that's not the market. That's not realistic. There's going to be some trades that work against you. We all know that. And so, in this case, obviously, Google had a really nice run up into its earnings, kind of sold off pretty tough following that. And really hasn't tried to gain clear footing yet. It's continued to sell off. It has held the line right now, at least at 300 for some support, but certainly looks like, given the series of lower lows and lower highs we've had develop here just this month, we could be certainly looking at another retest of that here soon. Could even see a reversal of these trend lines here and actually flip to a sell signal should this price action continue. So for this trade, definitely looks concerning given the recent price action for Google. Like I said, I'm not sure exactly where the spread specifically be trading there, but given that the strikes have been taken out, the stock's trading now all the way down to 305. I would certainly assume that the trade management guidelines probably would have been triggered on that one. So I have to maybe check in with Helene when she's back here on Tuesday to see what she's thinking about that one. Appreciate that, Don. Yeah, that's some of my nice decor back there. You got the flag. I've got some cool artifacts there on the ground. had someone to give me it's a collection of some arrowheads back there. Of course, my old football helmet from my college days back there. So got some cool stuff back there, but I appreciate the comment. I'm glad you liked the background. That's awesome. But looks like that was the final comment there. So I think we probably are safe to go ahead and wrap up today's session again. If you want to go ahead and check out the profit surge, excuse me, the replay of the profit surge that we did, the presentation we did here in the past couple days. I did put that there in the chat, so I'll go ahead and drop that link there again one more time for anybody that did not see that earlier or tuned in, midway through the presentation. But if you do want to go ahead and take a look at that replay from when John and I and Blane all went live on Monday and Wednesday, again, it was a great presentation. It was really excited to finally unveil the full profit surge suite that we use all the time here using my proprietary indicator and system. So if you want to check out that replay, I just dropped the link in the chat there again. Give you one final chance to go ahead and take a look at that if you haven't seen it yet. But I do want to thank you all so much for being here. I really appreciate you all taking some time to be here for today's TOD Live. Again, we love doing these sessions. So thank you for being here. Thank you for all the engagement. Hope you all have a fantastic rest of your week. And until next week, we'll be back here on Tuesday doing the next edition of TOD Live. So hope for excuse me, man, this cough is kicking my butt over here. So thanks for being patient with that. But hope to see you all back here on Tuesday with us next week, live for TOD Live. But until then, have a great weekend. Take care, everybody. Thanks so much.